Hey guys, welcome in this new video. I hope that all of you are doing great. So in this new video, we will talk about the US stock market and we will see what is coming on this market, what I'm looking for. So this video is basically a market update video. I've made a few of them in the past and you guys really like these videos. So here is another one with the current market conditions that I will be covering. So just before that we start, as always guys, don't forget to leave a like under the video. It would really help me grow the channel more. I would just really appreciate it as well, and make sure that you are subscribed if it's not already done. All right, so here we have the S&P 500 on the daily chart. So as always, we will start with fundamentals and then look at the technicals. So in terms of fundamentals, so just to put you guys in context, so this is the COVID crash. Around these lows right there, this is where the central banks came in and basically introduced their quantitative easing program and lowered their interest rate. So markets were able to go back up into a really strong uptrend that we have right here. And this basically has been the fundamental theme since that time. And I would say that today it's still the case. So one of the most important things to look for, it's everything that is related to the Fed and what the Fed will eventually do with their quantitative easing program and their interest rate. So just to give you guys an example, let's say that a new job report comes out, okay? If the number is not really good, it will show that the economy is still struggling to kind of recover from the pandemic. And that means that the Fed might keep interest rate low for a longer period of time and their quantitative easing program on for a longer period of time as well. And so, which means that a kind of negative report, right? Not necessarily in the number, but in the pace of the number at which it's growing. So if there is not that many new jobs added to the economy, this could be, a good news actually for the stock market, and we could see a move up on this. So this is just one example, but basically what you guys have to do in terms of fundamental is take everything that comes out and go about it with this thinking process. So if you see a number that moves the market, well, just ask yourself, what does that mean for the Fed? Okay, so you see the number and you're like, okay, well, does that mean that interest rate will be low for longer, or they will hike them at some point, maybe more in the near future, right? And so with this thinking process, you will be able to understand every single fundamental event that happens, and you will also be able to understand what that means for the market. So this is a really big important point. And so one of the most important topic that is also related to this in terms of fundamentals again will be inflation. So anything, that is related to inflation is really important. So this is something that the markets are watching extremely carefully right now. And every trader that use fundamental also are watching this very closely, because it really can move the market, especially at the given time where we have seen inflation recently pick up. And so you basically have two sides of the story. You have the Fed, who think that inflation will only be temporary. So they don't think that it will last in the future. So they are not too worried about this. And then you have the other side of, and you have kind of another group of traders, if you want, who believe that inflation will stay there for a longer period of time because of all the money printing that went on and higher demand and things like that. So you basically have these two different ways of looking at inflation. And so right now it's really hard to tell which one will be true. I'm kind of debating that as well right now, because there's no way, to predict the future. The only thing that we can do as traders is to make different scenarios, okay? So this was for the fundamental story. So overall, just to recap, following everything that comes out that can impact the Fed decisions and anything related to inflation as well, I would say that these are really the two main things to look at when it comes to fundamentals. Now, if we get on the technical side of things, so this is the S&P as I said on the daily chart. Here I have the RSI. As you guys know, I really like to use this indicator. It really gives us a good idea of what is happening. And one thing that we can already notice is that if we look at this uptrend here and we look at the RSI, we can see that the 50 level has been respected very well along the way. Here it went a bit under because we made a bigger correction, but if we kind of go through this one, we will see that all the other times the 50 level was respected very nicely. And you guys know, if you've seen other of my videos, that the 50 level on the RSI is really important. I've used this level many times to either take trades or even call tops and bottoms, such as I did on Bitcoin, the crossing under the 50 level on Bitcoin really gave me a strong signal of a reversal, and I was right on that. So it's a really powerful indicator, and it's one of my favorite. And so here, as we can see, well, it's still respecting the 50 level. So the first thing here that we can already say is that, well, as long as we stay above the 50 level on the RSI, and as long as we are still within the uptrend, well, everything kind of looks good for the stock market. If we want to add a few more layers to this, we could add the moving averages. So I have the 21, the 50, the 100, and the 200. So we can see that the 50 has been respected quite a number of times recently. So I would say that this is one that we could pay some attention to. And we could also add a trend line from here to here. And so as we can see, we have this level here, we have this one, and more recently we have this one. So if we zoom in a bit on the chart, well, in terms of the upside, it seems quite obvious, but what we would need to break is really this level here, which has been the last all-time high so far. So if we want to see more upside on the market, I would say that this is really, you know, the next big obstacle. And if we break this level here, then I think it opens the door for at least, you know, a bit more upside. So that is the thing to watch here. And after that, for the downside, obviously, we will have this kind of zone right here with this moving average. So the 21, the 50 moving average, and the trend line. So this zone here will be an important one to watch because we have a lot of obstacles. If all of this break, then what I would be watching after that will be these lows right there. And so then the question that will come here is, well, are we going to break under these levels, or are we going to hold around here and go back up? We will also have the 100 moving average that will come in play. So for the downside, this is really the first big obstacle. Second big obstacle, and if it really, you know, goes under pressure and we break under all of this, then I would say that we could watch the 200 moving average that comes here. And, you know, if we expect it to keep rising a bit because it's a slow moving average, since it calculates the last 200 days, right? Then, you know, it might come along with, let's say, these lows right there. So this could be another kind of area to watch as the moving average is going up. So these are really the three big levels that I'm watching for the downside. And for the upside, as I said, it's really just about this all-time high. If it breaks, it can keep going up. Overall, as you guys can see from this analysis, well, in terms of fundamentals, I would say for the moment, at least everything looks good. Everything looks under control. And in terms of technicals, well, we're still in the uptrend. So overall, you know, I think that in terms of probabilities, it's still pointing to the upside. Now, keep in mind that anything can change at any moment, right? So let's say that a really big number comes out related to inflation, and that the Fed start to think about, you know, rising interest rate or lowering their quantitative easing program. Well, everything that I've just said could change, and again, we could see more downside, right? Because the probabilities will now be toward more downside if we start to see this kind of difference in talk of the Fed, or, you know, really important numbers that come out that can kind of lead the Fed to start to look at things in another way, right? So it's really important to keep an open mind, to also not have any strong opinion, right? It's really important to always be able to adjust to the market. And yeah, that's pretty much it. So this is my analysis for the S&P. As you guys can see, not really complex, right? Just kind of basic stuff, looking at the most important fundamental events, then looking at technicals, right? So following a top-down approach, as I've been talking recently a lot on other videos. And well, this gives you this analysis, right, with a few important levels to watch. And you also know what to do related to these levels, right? So that's the great thing about that. And then if you have a good strategy, right, which again follows the probabilities, well, you will know, if you should buy on a breakout or if you should buy on a pullback and things like that. But this is up to you. This is your own strategy, right? Every trader has its own way of taking trades. And overall, right, if you kind of just follow the important points I gave in this video, I think you will already have a really good understanding of everything that is going on with markets. So I hope you guys enjoyed the video. Again, if you like it, you can leave a like on it. You can share the video around as well. And on that, take care, trade with care, manage your money well, and I will see you in my next video. Bye-bye.